The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but rather a lack in will. Vince Lombardi. And Coach Lombardi is 100% right. Victory is assured to those who continue forging ahead. And my friends, I want to encourage you to continue to practice what we teach each and every day. It is not hard to do. It takes 10 to 15 minutes, and what it requires more than anything else is willpower. The willpower to practice and to succeed. You can do this. Think about how simple this is in the abstract. You simply have to determine which is more likely to occur. That the ETF, the stock that you want to follow and practice trading, is going up or down. Think about that. A binary decision, 0 or 1, up or down. Which is it? And again, we work using many of the rules developed over the last couple of decades in complexity theory to try to make this as simple and as effective as possible. We're dealing with some issues of chaos theory here. Yes, we are, but what are we doing? We are simply sitting here each and every day. We know what it is we wish to do, and we are breaking things down with rules that will make this as simple as it can be, but not simpler. And when we look at what complexity theory teaches us, first is we have to have a good enough vision. We've got to start off with broad goals and then adapt as things change around us. Next, number 2 is we've got to have minimum specifications. Those are our charts. And then we have to have self-organization. We have to do what works. And that's what we work on every single day. What we're doing now may not work 5 years from now. It may not work 5 months from now. It's been working for quite a while for those of you who have been with us, practice trading successfully again and again and again and again. These weekly vertical crossovers are beautiful. They tend to work over and over again. But again, some point in the future, they won't work. Those of you who remember when we practice traded gold on the 4-hour chart month after month successfully, what happened? Stopped working. In January of 2018, I believe, the 4-hour chart just stopped. It was a total trading chart for us for a while. And we practiced traded gold over and over and over again successfully. Then it just stopped working. Now, complexity theory tells us that we live in a dynamic universe where things do change. So what we do is we do what works until it doesn't work. That's what we do. And then we look for ways to then figure out how to accomplish our goal. And our goal is to follow price movement. Never, ever, ever forget that. That's the only goal. Accurately follow price movement. That's what we look at here on these charts every day. That's what's clear and clean when you look at them. And that's what we're going to jump into, my friends. If you don't have our book, it is available, Charting Your Way to Wealth. We have an autographed copy for you. Follow the link in the show notes. Don't forget, Patreon members, we have our live Patreon call-in on Wednesday, 12:30 Eastern Daylight Time. You should have already received an email. If for some reason you're listening, you're a Patreon member, and you have not received that email, you need to email me, cw@chartingwealth.com. We'll make sure you have the call-in coordinates. Going to be talking about a lot of fascinating things, including some tips on using the 2-day chart. And again, more about complexity theory. So again, if you're not a Patreon supporter, want to help us, that would be great. Just follow the link in the show notes to do that. Same where you'll find out how to purchase the book. Let's jump into the charts. S&P 500 and the NASDAQ 100 and bonds up for the day. Gold down quite nicely. Let's jump into the charts. We see on the S&P 500 so far for the week, what do we have forming? We have a red down candle. It's really more like a red spinning top, not much of a wick on the top or bottom. It's just the first day of the latest one, but it just looks like a sideways slide. Now, it was up for the day 0.47%. Heiken Ashi candlesticks are telling a little bit of a different story. Remember, they're not your typical up-down high, low, open, close that you get with your typical Heikinashi, your typical candlesticks. These are Heikinashi. I'm told it means average pace in Japanese. Great training at the website and on YouTube. 126,000 people have listened to it. I'd encourage you to study it also. And again, what do we see happening with the price percent oscillator? It's pulling slowly away from the red signal line, but look at that derivative oscillator. It's gone positive. Now again, we do have a weekly vertical crossover is what we could call it. I mean, basically what we had was a bounce off. Remember, didn't cross over, bounced off. So we're treating it very similar to that. You can look at it similarly. We've just been able to redraw, not the best of trend lines. And again, it would have been broken starting the week off. So again, it was an up day. Things again are a little squishy. What do we see going on the 2-day chart? Well, of course, now this is interesting. The latest 2-day candle is a green up candle. It represents movement for Friday and Monday. The prior one on Thursday was a down candle. Still don't have a crossover going down, but guess what? If and when that 2-day chart crosses over going down, might give you a jumping in point to consider for a practice trade on the S&P going down. But again, got a green up candle that's formed on this latest 2-day. So we'll continue to watch, wait, and consider what's going on. Let's look at the 4-hour chart. It's still negative, but up in the morning and the afternoon, below that 2-day trend line still. But that derivative oscillator has been losing energy since it topped back on Wednesday morning, the 25th of September. As we finish up this last day of September, go into October. That's where we are on the S&P. So again, we're paying particular attention to that 2-day chart. If and when it rotates over going down, might give us an opportunity to jump into a down move for a practice trade. Remember, always fill out your trade worksheets. What do we see on the Qs? Up for the day 0.95%. Now, when we look at the candle that's forming here for the week, it doesn't have a wick on top. It's just a decent red down candle with a wick on the bottom. Not a big candle, but again, a red down candle, all encompassed within the movement of the prior week's candle. So you can pay attention to that. Derivative oscillator is still losing momentum, not a lot, but losing momentum. It's not green, it is red. And the price percent oscillator still moving down a little bit, not quite flat. So that's good. Okay, let's look at the 2-day chart. Now, it crossed over. Even with the up day, it did cross over. We can see what happened on Friday. We had that crossover going down. We had an up 2-day, I'm sorry, that was Thursday, forgive me. We had a 2-day up candle for Friday and Monday. So it is a green spinning top with a little wick on the top. Most of the movement is on the bottom. Derivative oscillators gain downward momentum. That price percent oscillator continues to head down. We also recorded a jumping in point on that 2-day trade. In fact, I recorded it for practice at 189.56. And where are we as we close the day? We're 188.81. So again, we're not quite $1 below our jumping in point on the 2-day chart on the 26th of September at 3.55. So again, we're tracking that to see how well that practice trade goes. We'll continue to do so. Again, even with the green up candle, price percent oscillator still moving in the right direction. Derivative oscillator moving in the right direction on that 2-day chart. 4-hour chart, we can see where things had sort of looked like they had bottomed and then dropped and then up in the morning, up a little more in the afternoon. Like we said, the Qs was up 0.95% for the day. Derivative oscillator continuing to lose downward momentum. Price percent oscillators heading up, but still negative. Derivative oscillator still negative. So we're still technically following that practice trade. We'll continue to watch it, monitor it, and see if it's going to work for us. But that's where we are on the Qs. Now we're going to leave stocks. Go to bonds. Remember, we had that weekly vertical crossover that we notified everyone about at the end of the week, encouraging you to look for a potential entry point in a practice trade either on Friday afternoon just before the market closed or on Monday morning. Got a couple of things, of course, that we talked about that we want to pay attention to when it comes to bonds, and a learning lesson here. What do we see, though, so far? We see a red open box candle. Remember, that's not a strong down candle of any kind. It is a cautionary up candle. Price percent oscillator, however, is pulling away from the red signal line. Derivative oscillator gaining downward momentum. And again, we can go ahead and it's very hard. We're just going to remove our trend line at this point. We really don't have one to be able to draw on that down move. But we're going to go from the from the weekly to the 2-day chart. We look at our 2-day chart, and it's still negative. Derivative oscillators losing downward momentum. That price percent oscillator is about flat, and the latest candle is a green up candle, open box, spinning top. Means indecision tending up, of course. If we look back at the prior big green candle on Tuesday the 24th, that represented Monday and Tuesday of last week, we can see that we've not reached higher highs or even as high as the box itself was, the open box. So again, there is some up movement in bonds, weak though it may be. Derivative oscillator, like we said, is still negative, and that price percent oscillator is about flat, maybe heading down just a little bit. Again, up for the day, weak 0.25%. So we'll continue to watch, and we go to, now remember, that's in a confirmed down move on the 2-day chart. We look at the 4-hour chart, and of course, it was our real hold off on jumping into any down move. Why is that? Because it's been positive for quite a while. Crossed over going up back on the 18th. Went up until the afternoon through the end of the day on Tuesday, the 24th of September. And then since then, it's really been sliding sideways. So what are we waiting for on bonds? Let's wait and watch for the 4-hour chart to rotate over, going down. When you see a crossover on that, consider pulling the trigger on a down trade. Now, that may not happen. And it may not happen before there's a crossover on the 2-day chart going up. But at current position, with the 2-day chart confirmed down, the weekly chart confirmed down, consider jumping into a down trade when that 4-hour chart crosses over going down. Now again, it has been in a confirmed up move all the way back to the afternoon of the 18th, well, to the morning of the 18th. So again, keep your eye on that 4-hour chart on bonds, ready to jump in on a practice trade down move. What would you look at jumping into for your practice trade? TFB, Tango, Bravo, Foxtrot. That is the single inverse of 20-year bonds. TFB. Okay, give that a try. I want to make sure I'm giving you the right one. It's TBF, forgive me. Tango, Bravo, Foxtrot. TBF. That is the inverse of the 20-year bonds. So when bonds go down, TLT goes down, TBF goes up. You can see it's considerably less than TLT, but again, it attempts to move at the same percentage day in and day out. I want you to practice trade that. Okay, now back to the weekly, going to gold. Gold down for the day, 1.55%. Of course, we also had a weekly vertical crossover going down on gold. That happened on Friday afternoon. And you'll see the difference in gold and bonds when we get to that 4-hour chart, why it might have made more sense for you to consider a short position, practice position on gold at the end of the week to be able to see how that works versus TLT, and there's a reason. When we get to the 4-hour chart, I will show you. Down strong for the day. I think it was down at one point. I saw a about 1.68%, ended the day down 1.55%, starting off with a strong red down candle, derivative oscillator gaining downward momentum, price percent oscillator heading down decently. We go to the 2-day chart, and of course you see a big red down candle, and at some point we will redraw that trend line. We see the price percent oscillator spiking over, going down, derivative oscillator gaining downward momentum. That's quite beautiful. Then we get to the 4-hour chart, and of course, what do we see on that 4-hour chart? We see that it had already crossed over going down, unlike 20-year bonds that was in a confirmed up move for many, many days and still is. Gold had already crossed over going down back on the afternoon of the 26th of September. So, of course, jumping in on Friday afternoon might have been something that you could have considered at the 355 watch for a practice trade, or after you checked out the charts in the morning, jumping in on that down move. That makes a lot more sense than, of course, jumping into bonds. Now, again, we're waiting to see if that pullback on the 4-hour is going to rotate over on bonds and give us a jumping in position. But gold is definitely going in the right direction, a down direction. But again, want you to practice that also. And remember, when you're practice trading, all you need to do is record the entry point that you choose, write that into your trade worksheet, record the time, the reason that you're jumping in based upon the candles, based upon the indicators, particularly the price percent oscillator, number one reason, the derivative oscillator, what you're thinking, and then track each day what your thoughts are as to what's going on and what you should be doing. Then, when you get finished and you pull the plug, take your profits or your losses, look then back and analyze what it is you did right, what it is you did wrong. That's why we created the trade worksheets years ago, along with the daily market worksheets and the weekly worksheets. They let you collect your own trader's journal, your trader's diary. This is what you need going throughout time to be able to show what it is you're learning and how good you are getting at what we do. And I'm telling you, over time, you will get better and better and better. How long will it take? I can't tell you, my friends, but it will take time. It will take patience, but it's worth learning this. Think about how much you empower yourself, learning what we teach, learning what others teach, reading books, studying to show yourself approved. That's what you got to do. And again, I just encourage you, want you to stay with what we do. Pay attention every single day, 10 to 15 minutes. That's all we ask. And use those trade, daily market worksheet, and weekly market worksheets. They are so good for you. So, wrap up here. We are waiting for gold we're watching gold as it continues to move down on confirmed weekly vertical crossover. We are waiting for TLT, which had a confirmed weekly vertical crossover, to jump into a practice trade on that when the 2-day chart rotates over, the 4-hour chart rotates over going down. We're waiting for that to happen. And of course, we are continuing to watch as as the S&P 500 and the NASDAQ 100 continue to show us what they have been showing us. We see some of that pulling away, going down, trying to occur, and we're waiting for confirmed moves in those also. Folks, that's where we are as we end the day on Monday, go into Tuesday. 10 to 15 minutes a day is all we ask. We love to hear from you. Haven't purchased the book, please do so. And again, Patreon members, remember, call in is this Wednesday. God bless, all the best from Charting Wealth World Headquarters.